thinking about what the gentleman was saying about that might be the new norm. This might be the new normal. These big swings, and God, it certainly looks like that's the case right now. Let's go and take a look at gold. Gold is actually moving a little bit higher in light of us continuing to press lower here. Bear with me. I think someone was saying, is everything okay with the sound? And let's see, I think everything's okay. I don't see anyone else saying anything about it, but that was from Pangiotis. Let me go on and, but that may be from an older, let me go on and move into the gold now. Wow, I cannot get over the SPUs taking this dip to this extent. And you can see here, gold has turned around and taken off here. Finally, even throughout this whole move, the gold market was sitting here relatively quiet. And then we finally turned around and we launched up in here. You can see that here. We finally broke up a little bit higher. Gold's been rather interesting because even in the move here that we saw, we never really broke lower. We kind of felt like the shackles were being taken off of gold. Actually, when the S&Ps had rebounded or come off those lows, because we weren't seeing what we believe was that forced liquidation, people being forced to sell successful or profitable gold positions to cover for stock market losses. And we're finally starting to move here, not to the extent that you would have expected in light of where the S&Ps have turned around, giving up everything back. I don't remember who it was in the chat room. It wasn't yesterday. It was the day before yesterday when the S&P started to pull off. And I think that was the same date that me and Steve had done the daily roundup. And gold was here, I think, at the same area, the 1642, 45. And we were talking about, hey, if we get a close above 1644, it opens the door for it to go much higher. The S&P slipped, and I think they had fallen down to 1632 or 30. And then someone in the chat room said, well, there it is again. They're being liquidated. I'm like, wow, that's exactly what's happened. Because we, at the time, the S&Ps were back under pressure. Gold turned around and slid off a quick $12+ dollars. I'm thinking, wow, this is back, it's trying to slide back down again. We've since bounced back, but I mean, and S&Ps right now, they're 3068. So we're trying to find a little bit of stability, but it's not like as if it's jumping up. You would think, as much as the S&Ps have come off, you think they'd probably be seeing a big bounce, and we'll pop back into that real quickly just before we take a look at oil. Bear with me. So you would have thought, like, look at it here right now. You'd have thought, wow, there is some support. And you would have seen a snapback of about, realistically, a snapback of at least 8 or 10 handles, and you're not seeing it. And I think it reminds me, I don't know what I was looking at the news really from Super Tuesday, and I was just clipping across YouTube, and then I saw there was a wrap up for the market, and then I clicked on it just to see what they're saying, and the reporter was saying, hey, she spoke to someone, that someone was saying, hey, this may be the new normal. These 1,000-point, which I don't really follow the Dow, 1,000-point swings, and heck, I guess we're starting to see it. Look at this. Holy smokes, man. We are starting to move up a little bit lower off these lows, but I mean, certainly not much when you consider the extent of this move. Let's go on and move into the crude oil market. I'm really surprised. I mean, that this thing is just really slid. And can you imagine anybody that would have tried to pick this up on the way down? Everybody's underwater, unless you tried to pick it up in the last 4 minutes or something like that. But anyway, nonetheless, looking over here, crude oil market. Pull this back here on the 2 hour. Now we've been getting all these headlines out of OPEC. They're gonna do this, or they're gonna cut that, and I think I just saw something come across before we came on. I forgot which one was saying. We think there's gonna be the Nigerian oil minister. I'm sure there'll be a compromise. So it's getting a little bit old, but nonetheless, you can't argue with the rally that we did get back up in here, but you can see the market is digested. We're kind of sitting around here. With that, we do have SPOOs up to 30.70, but like I said, I'm surprised, to the extent we've come off. Let's go on and move into the FX, and then we'll take a look at some news. Bear with me. And I'm surprised here, Euro is still holding up here in this upper area. We're going to touch off on the news story real quick, and let's just go back and touch into this as it came on the air. We're talking about that. We did get German market construction PMI, which I don't see why it didn't pop up in here for me. That's what I was trying to update when we're coming on. So nothing here, but I do, like I said, as we roll into today, later in the session, in the U.S. session, we do have jobless claims. We do have challenger layoffs. They come in at 7:30 Eastern. I'm in the Central Time, so we're starting 6:30. Be 7:30 Eastern. Jobless claims at 8:30 Eastern. Labor cost and ISM manufacturing PMI. And this kind of threw me off because it's saying it already has a release. So I don't know if that might have been an error or not. But we have durable goods and factory orders, 10 a.m. Eastern, and that's it. So although some interesting data, not necessarily that really going to turn around and move it, although this one looks like, I don't know if that's correct or not, that it's already being posted. But let's go move this out of the way. And let's go on and get the news story here. This might in part explain why the dollar yen just can't seem to get a lift, even when equities took off. But it says tumbling bond yields and coronavirus halt the dollar advance. The dollar struggled to make headway on Thursday as very low U.S. yields and the prospect of even more monetary easing held back gains while virus fears supported the safe haven yen. Strong data showing U.S. services activity at a one-year high, hitting growth, had pushed the greenback 0.3 higher on the euro overnight, but with the benchmark U.S. Treasury yields just a tad above 1%, and futures markets pricing in another 50 basis points of Federal Reserve action by July. The greenback failed to forge ahead in Asia, leaving the euro steady at 11.36. The ongoing decline in U.S. yields and rising volatility is continuing to cause a position squeeze, said Ray Trail, assuming the Fed is going to act several more times, rate cuts in the next month or two, including out of the 17 through 18 March meeting. Then for the short term, at least, there's some further weakness in the U.S. dollar to play out. An emergency basis point cut, we already know about that. Of course, we did have the rally in result of the Biden victory. And like I said, the market was really concerned that if we did get, if we saw Sanders do really well, that it was really going to spook the market. So you saw that relief rally, and part of it I was kind of suggesting in the morning, which was kind of called the Biden Bloomberg rally, because we did see the market rally higher, but then we, at the same token, we saw, bear with me. Just an annoying thing on Twitter I'm seeing here. But we also saw when Bloomberg exited out and said he was putting his support for Biden, then we saw like a secondary boost. At the time, this was in the morning. Obviously, like I said, as we got to the latter part of the morning, the market was just kind of sitting there in a certain relatively tight range overall, kind of just bounced around doing not a whole bunch of anything. But anyway, nonetheless, says deep concern widening over economic fallout, has the yen rising 0.2 through Thursday. Mainland China reported a rise in new infections on Thursday. Deaths are mounting globally. Italy has closed its schools, and California has declared a state of emergency. The IMF now expects world growth will drop to its lowest since 2008-9 of the financial crisis. And the Aussie, which has climbed nearly 3% from the 11-year low last week, eased to 66.19. And let's go and move into the other story. Smooth your 7 handles off the low, but that's not really saying much when you consider how much it's fallen. There we go. And dollars rally sputters as investors eye more Fed cuts. We fairly basically already touched on that other story in regards to this. Let's see if there's anything new. At the same time, the dollar has been pressured by a powerful rally in the euro, fueled by risk-averse investors unwinding carry trades. Prepare for the dollar weakness, says Mark Halfly, a global economist. The firm is recommending that clients bet on the British pound to rise against the U.S. currency, believing that the UK government is likely to deliver fiscal easing. A weaker dollar would be a boon. That doesn't make any sense if they're believing on further is fiscal easing that the cable would rally. But anyway, the weaker dollar would be a boon for U.S. multinationals that have already taken a hit from the coronavirus impact. A falling greenback could also soften the coronavirus impact on economies of developing countries, making it easier for them to service their dollar-denominated debt. Stephen Innes is also recommending betting on the Japanese yen and the euro to rise against the U.S. currency as the Fed cuts further. So let's go on and move into the analysis. So the euro successfully back tested the 1095 level, closing mid-range. The pair remains susceptible to a pullback to 1065. Resistance is going to be 1170. So you can see here we back tested down here 1095, kind of closed middle of this range here, and we're doing a whole bunch of nothing at the moment. Although my thoughts is that considering this big move, I still have a lot of people that have taken shorts in this upper area. And we're concerned that, hey, if we rallied too much more, we could goose those stops. But my thought is this huge move, and we've seen, if you follow the euro over several years, I mean, it's not, would not be surprising if you look back at the older moves where you would see the euro kind of sit here and like, oh, it's got to fall back. And then we just take another extension up here. But I think this time would be a little bit different. And although I think that we may tire up in this area, where range, at least for today's, relatively tight, is that we can come back down here. But I think that any moves down here to this 1065 area, you'd be looking for people to be really quick to go and get the heck out of Dodge. Yeah, right there, 1075. That may be as, at least on the short haul, may be as good as it gets. Hang on. Right there, 1075. So we're going to go with that for the support, 1075. I think you might get some nervous shorts that they're thinking, hey, if we could dip there, whether it happens or not, I'm just saying is on the very short-term basis, what we look at, we're going to go at 1075. And then on the upside, we said 1170. We'll stick with 1170. I think 1170 in the sense that if you get beyond 1170, you're going to spook some people. And they're probably going to say, well, I definitely don't want to be covered up in here. So probably going to be some stops just above that. So let's call it 1172. So cable pushed higher for the day, although coming up short of the buy chart resistance, which was 28.82. Resistance looking out will be 29.28, with support remaining at 27.42. So we're still pushing a little bit higher, and we've gotten beyond, which was our previous resistance, which is 28.82. But right now we're going to look for today 29.28. We're still keeping it relatively close. Still bearish, 29.28. And for support, it won't be all the way back here, but we will find support right there, which is going to be, that may be a bit rich. Let's go and take a look on the 2-hour chart, see if we can see something. I'm still amazed that this S&P is giving up back this much. Right here, coming across 28.37. And the S&P is back here at 30.67. Thank goodness I didn't stay up late trying to do this analysis because I felt that it was going to have to be redone over, or I guarantee I would have been trying to pick this thing up as it went lower. Holy smokes. Aussie dollar. Aussie extended gains on Wednesday, closing right at resistance at 66.26. Further short covering will challenge the key level of 66.78. Support is going to be 65.35. And that's going to be a little bit of a push up here to 66.78, but we are very oversold. I think that's going to be the resistance, although it may take a couple of days to even get up there to challenge it, but it will be 66.78. These boos are something else. They can't even get a bounce. And support being 65.35. That may be a bit of a stretch here. We're going to go right here, keeping it pretty tight, 65.69. See if they can't push up a little bit higher. Let's go into the Kiwi. Okay, the Kiwi gently moved higher on Wednesday, breaching the 62.89 area. You see that right there. The next level of challenge will be the 63.50 with support at 62.49. So same thing going along with the moves that we're seeing today. Everything's relative, I was going to say tight, but relatively restricted as far as the levels we're looking at. So it's going to be 63.50 on the upside. And support we had at 62.49. Same thing here. We're going to tighten that up a bit here. So it's coming across here. It's going to be right there, 62.64. And let's go move into the dollar CAD. We are actually challenging the lows again at the S&Ps. Holy smokes. Hang on a moment. To the dollar CAD. The dollar cat's pop on the Bank of Canada rate cut was short-lived as the pair found sellers just ahead of 34.37. Support will be, well, 333. We didn't finish it up here, which I think was going to come up at 33.32. I think I had, but once again, we did come up short. There was some people expecting that we're going to really launch, and we did run up in here. And if you look here, let's take a look. This is rather interesting. You see this move here? That would be a long-legged doji. And the thoughts are, it's not too long, but it is still relatively long-legged doji. And you can see here is we finished in the middle of the range. Okay, although the wick could have been a little bit longer. But the proper thought process is, you can see here, bulls don't have control because we finished in the middle. Bears don't have control because we finished in the middle. So generally what you'll see is you'll see the market pair back in what has been the overall direction. Overall direction has been higher. We paired back a little bit. Although I don't know what pair it was. I saw this about, I think it was almost a month ago, and we saw, it might have been something like the Euro Aussie or something like that. I don't remember at the time, but I remember it turned around and resolved itself even higher. But once again, it's not, you could almost call this a medium-legged doji, because a long-legged doji would have been like up in here. You want to have a big wide range, and it's kind of middle range here. So what we'll be looking for is a dip back down here. And we're actually going to, once again, in keeping it tight, we're going to see if they can trigger some lows here. So it's going to be 33.16 for support. Gold at its high, 16, almost 1645, 33.16, and then the upside is going to be this 34.37 if they do get up here. That's actually where the market came up short yesterday. Let's go and move into the peso. Goldman Sachs, the guy in the squawk is squawking in my ear. It's getting a little bit annoying. But anyway, just posted here. Goldman Sachs is looking for the UK economy to push into, as a result of coronavirus, to push close to a recession. So that just came out just now. Okay, so dollar peso. The peso continued the weeks of volatile trek on Wednesday. The low challenged the pivot of 1923. You see that pivot there. With the session high at the key level of 1962. Resistance will be the 1962, which is where we're at right now, with support being at 1932. So let's go and mark those out. But we're there right now. We're actually a little bit above it. 1962, 1932. Wow, we made new lows in SPOOs. Holy smokes. And we'll get to that once we finish up in FX. I'm just a little bit surprised here. We have not even been able to get nary a bounce on this. We did get a bounce on the way down. It looks like we tagged 30.86. We rallied up to 31.04, and after that, it's been downhill. Let's go move into the dollar yen. You know, if the SPOOs aren't able to pick up, this is honestly, this is a little bit scary. Then if we keep on and we open up the US session like a sub 30.50, this is a little bit spooky here then, because we're just not getting a bounce. New lows right now, 30.63 and 3/4. Let's go to dollar yen. Dollar yen found minor short covering on Wednesday, despite a strong rally back on in equities. Resistance, and you can see obviously the dollar yen's working lower because we're seeing equities move lower, and it's a sustained move in equities, at least in the futures. Resistance will be 804. Support is 709 with a break leading to 652. Well, we're already below the 709. So potentially, and that's my concern, is now with these SPUs, they're not getting a bounce. If this sell-off continues unabated and we open up the US session at around 30.50 and we press lower, holy smokes. So with that, then I'm going to go with that secondary move. You can see here, support is 709. Well, we're below that with a break leading to 652. So that's going to be our bias chart support of 652. And we are going to have to do some work on these SPUs when we get to them in a little while. Resistance, well, you're looking at it right there. There you go. Clear as a doggone bell. Right there, 751. Let's move into the cash dollar index. So the dollar index held above Tuesday's lows, challenging the bias chart resistance of 97.64, but finished the day with a whimper. Resistance will increase slightly to 97.70 with support on a break at 96.71. I think we've got to go for that 96.71, folks, in case these SPUs get a little bit overdone. We are pushing a little bit hard at 30.68 now. Make sure here. 96.71. Oh, we did cap that. And 97.61. I think we're going to keep this one. This one will stay the same. So we'll keep that. And let's go moving to the cross rates. SPU's got to bounce to about 30.68. Now they're kind of sliding back a little bit. And like I said, if we get into the 30.50s, this is going to get a bit concerning as to what we can expect from the get-go on the U.S. Open and beyond into the session. I hate to sound like a broken record, but I'm just stunned by the lack of the ability to even bounce. The Kiwi yen, okay, this is the earlier analysis from the week, so let's take a look. We had seen these yen pairs consolidate a bit, and they're still consolidating with the exception of the dollar yen. So the resistance that we had yesterday is all likely going to be well intact. So we had 67.93. Hey, there you go. And on the downside, 66.95. No change here in the Kiwi yen. And you can see it's staying relatively tight here. Unlike the dollar yen, which is resumed that is heading for new lows. Let's move into the euro yen. Same thing here, relatively tight. Unlike, like I said, the dollar yen will jump back to that. Here we are just, we're actually coming a little bit off the lows, but still we push lower. Completely different, I wouldn't say completely different, but obviously a different dynamic. Look at that at the end compared to what you're seeing right here, all within a tight range. You see, so it's really the dollar yen that's really taking the real beating. So in all likelihood, it's still going to be the same here. On the upside, downside, euro yen 20.56. That might be a bit of a stretch. On the downside, 19.46. Well, we're already below the 19.46. So if we do break a little bit lower, here's where support comes in, which is 18.86. If what's going to happen is if we see U.S. equities really take that move lower in the U.S. session, and certainly look like we could go that direction, we'll see the yen further strengthen, and that will push us down to 18.86. Upside, what's the pink line right now? 1986. And take a look here with the euro odd. We have come back. It's kind of, it's really just allowing the market to digest itself. What we had yesterday, going today, was 68.38. We've just exceeded 68.38. Let's take a look on the fib. %, 67.31. I don't expect it to get there now, but I think that the Aussie can strengthen a little bit, and we'll eventually get there. But wait, that's still a long ways off. Let's go into the 2 hours so you can get something a little bit closer. Well, 67.44, so we'll go with that. 67, which is ahead of that 38%. 67.44. And on the upside, when this alarm goes off, I have my headset or whatever you want to call it, so I can hear in case something while we're doing the webinar, I can hear the squawk come across or some headline comes out real quick. But the chirp on these alarms is just a little bit too much. On the upside, it's going to be right there, 68.95. Okay, we're seeing this yield back a bit, but not a whole lot. But we could still expect it to press a little bit lower. But look here. We came right there. You see that close here? That's working as support. But we would expect it to press just a little bit lower, and then it takes us right down here. 76.02. I'm anxious to hurry up and get to the S&Ps. I want to do some analysis on that. And on the upside, just about the levels here. So right there, 77.54. I'm over here looking at my chops. I want to hurry up and get to the S&Ps. I'll be doggone, new lows, or we're at the lows again in the S&Ps. Aussie yen, let's take a look at what it was for yesterday. We had 71.50 on this upside, and we came up short of that. 71.50 is going to stay in place, and on the downside, we had 70.21. We already mentioned that if we see another leg lower, it's really going to press it lower. Although the Aussie yen is holding up relatively well, because once again, the Aussie strengthening a little bit. So we're just going to move it just right there on that open here, which was a close and open, 70.45. Guppy holding its own here, but hey, there's your support there. clears a bell, 37.14 to challenge it. You could see a move back lower here. What the heck? Look on it. Right here. But we're holding up already well. So really it's just going to be here at this 37.14. If we do get the sterling to strengthen a bit, it's going to be this low here, which is 38.78. Okay, finally we're at the last pair. We are starting to see the sterling regroup. You can see here we had a nice tweezer bottom here, push a little bit higher. Resistance is going to be right there on there, which is going to be 95.54. Resistance is above here. You can see right there before you get to those lows, which is going to be 93.47 for today. Those are your risk levels. Dolly in here back on the lows again. Needless to say, where the S&Ps are, they're right at their lows too, or just about. Let's go on and move into that. We are trying to pick itself up a little bit off these lows. Let's take a look on this 1 minute chart. So if someone's trying to pick it up, you would have, well, we didn't dip that much, but it would have been trying to pick it up at 30.64 for a move higher here. But that being said, whether you're looking at a 1 minute or 5 minute chart, although with key level here, you can see I have it in the pink line. Let's take a look real quick. 30.65. We did dip below that. We're trying to work a little bit higher. But as you can see, you need to reset everything. Let's move into the weekly, see where everything stands. You can see where they ran out of gas up in here, up to came all the way up to this 31.25, which is a 50% of this move. So I guess that was a decent area to fade, but I'm surprised to the extent that it faded. But that was that was the 50% of this entire move. So I guess that made it, and 31.21 was an area here. We're looking at the weekly chart. So you can see where they would have faded. Anyone who played it long, although we made it up here to 31.37. Hard to see how it rallied that far. But obviously people were getting stopped out as they were stepping ahead, trying to sell it at 30.95, 31.05, maybe 31.12. And then once again to see this come off quite a bit. But that made sense where people probably would have taken the profits, and then really on a dip back, you probably would have thought, okay, let me pick my areas to get long again. Probably one of the first definite areas. We really had, this isn't bad, this 30.70, we just already remarked about that. Probably would have been, we'd have to go into a little bit lower time frame to see what other areas it would have been. But obviously that was key here, that 31.25, although the market got overdone, but you can expect that because that was going into the close. Let's go and move into the daily. So definitely people would have stepped in at this 30.91 on the way back down. And so on the way back up, 30.91 is going to be key. On the way, if we make a move back up, 30.91 is going to be a challenge area here. So it's something you definitely want to keep in your or make a note of. Bear with me. This looked like it was going to just go and turn and roll over, and it didn't. And I tried to caution in the room was that, you know what, let's let this thing play itself out. Because what I was telling people was that think of it the day we had before. I said, think of it as a hang. I like to always think of things in analogies. I said, hey, think of it as a hangover in the sense of what we're experiencing today. Like, you know, the market really went on a bender. You know, like someone really got all partied out, and then the next day they have a hangover. Now the market's kind of like trying to, you know, work itself out. You know, you get a hangover. Someone might ask you, "How do you feel now? How do you feel now?" Look, let me just rest. I'm gonna go and try and sleep. Try and, you know, I'm really feeling really bad after the bender that I got yesterday or last night. So that's what I was saying is let the market digest this big old move and see what it wants to do. And I thought if we break higher, we'll have to reassess. Now we did break higher, but even then, I would not have expected to break this high. I thought maybe we would have challenged potentially if we squeezed higher, 39.2, maybe even a little bit higher, and then we would have pared back a little bit. This thing really got overdone. And the thing that's so important, so to speak, is now we did come up. Remember we mentioned we came and challenged this 31.25 again. But to me, the thought is that we turn around and we've given so much of it back. But we have 30.66 as a key area also. And you know that the market, you know, always goes a little bit overboard. Let's look here. And then the next target on the downside that they would be shooting for if they did push down here. Let's say, as I told you, we got down sub 50, sub 30.50 in the US Open. Then that's the area they'd be looking to challenge, which would be 30.34. But on the way back up, if they get that way back up here, all the way back, this is going to be key, 30.94. So we want it, we're going to mark it 30.92. I'm trying to say a moment. So we want to make sure that stands out. So if we do get a rally back, this is where the market will have a bit of a contentious battle if we make it up here back to 30.92. So the things that we're looking at is that the market rallied back up here to 31.25. It was our second trip up there. That's a 50%. And so that made sense where people probably took some profits, but we still should have. The first area they would have looked to stepped in as a value play on the downside, like, hey, look, let me go and get long, would have been right back here to the 30.91. You can see the significance here. Look here. We rally here where market's, you know, having a tough time here. You see here, we fall back. The market finds a group we're at, 30.91. We make another run, we fall back, we overtake 30.91, because remember that's that previous low here, so you're going to overshoot it, but ultimately the market held and closed there, and from there we launched up higher. So on the way back down, where do we find support? 30.91. We follow the way back down, where do we rally back up? 30.91. Remember, the market always remembers these levels. So as we blasted through on this one run up in here, we failed at the 50%. We revisited it again up in here, and the key thing is anyone who was looking like, okay, I think we're going to work higher, or maybe we'll have to work a little bit higher and then we'll fade back. But let me go and step in on a value play at 30.91. I would have thought that would have been the area, technically speaking. So look, these people are underwater. Now, I'm not saying that's the only level they came in, but they probably would have picked it up 30.91. We'll move into the 2-hour chart. Probably their secondary addition, if they were thinking more medium term, would probably have been 30.71. That 30.66 might have been a bit of a stretch here. So they probably would have come in around 30.71. So they're underwater. You would have thought, you can see here, there's that 30.82, which was also a little bit of a pivot. They may have, someone might have said, okay, I'll pick up at 30.91. I'll add some more at 30.82, and I'll add my 30 at 30. I'll add my last 30.71. So there's a thought right there. Once again, we got up to the 31.25. You can see I have it in this. There was a number that, remember, this is when they cut. And I was saying in the chat room, oh, that's a pretty key number. At the time, I think I was listed as 31.34, but I thought we could eventually challenge up to 31.56. The market did not. So you can see here, this is almost where they came back up here yesterday. So it probably made sense where they bailed out. And once again, it was all towards the end of the day. I never would have expected the market to move that high. But once again, on the pullback, you say, you know what? This market really came off of those lows. We do want to work higher. Maybe we'll eventually be able to challenge and come up to 31.56 before we reset ourselves. And so on the way back, the areas and I would have thought of good value to step in, have been like, oh my goodness, we broke 3,100. This is fantastic. I'm going to get long at 30.91. Okay, we're a little bit overdone. I'll add at 30.82. Oh, okay. Well, golly. Let me go on and add my last 30.71, and they're still underwater. So that's what I'm saying. So the areas of contention, I already mentioned 30.91 on the turn back. I think that would be a big area for the market to get to, where you'd see, even if the market rallies, you're going to see some shorts to come in and then see the market dip down. And the first medium area is right here at 30.82. If the market can challenge up, that's going to be its first little battle. So let's move this. And let's hope it gets up there, because I tell you what, if we go into the U.S. session and we're sub 30.50, as the saying goes, no bueno. So here's going to be that first battle, 30.82. That's going to be your first battle. And then they'll try, and if they make it up to the 30.92, then that's another different thing. But that 30.92, really 30.91 is where you're going to really see a big fight. That's when they get to the top of the hill, and they're all duking it out up there. Provided we see that scenario where they do get up there. It's not going to be good if we continue to go and sell off. Because think of it here is that really we can accelerate if we get too much lower, because like I said, anybody that was long and added and re-added, or even if they wait to 30.82 and now they're even finding this even lower, they can say, I got to get out. And so you can see this market quickly accelerate. And once again, that would take it to this value area, which then we talked about. It would be down here at 30.50, where the market, you'd probably see a lot of stops taking us down to 30.50, and then the market would probably try and find some buyers in here. But then at this point, if we got down there, then the area of contention would then be 30.71 to retest even lower back. That's it for here on the SPOOs. You can see we're barely near getting a bounce. But let's go and move into the gold market rather quickly. Well, it's still punching higher here in gold. This is a key area here. Let's go with 1648. There. 1648 is going to be a key area. And we've consolidated really well. I mean, think of it this way. Gold didn't even come off that much at all when SPOOs had that big rally yesterday. But the reason I think it didn't come off is once again, and I thought to myself, I go, I don't want to touch gold because I think it's too tricky. And when I said I want to touch, I think it's been let out of jail, so it was able to get higher because we weren't saying that this long liquidation resulting from stocks being sold, so people having to sell their gold positions. But because of this rally, I thought, well, there's some good opportunities for some quick scalp shorts. But I said, you know what, this market now that's been let out of jail, you got to be really careful. Well, right now, if the SPUs go sub 30.50, you can quickly see this thing accelerate and probably challenge that 1662 easily, if not 1666. So the safer play in gold is just to buy it on dips, and it hasn't been too much as far as dips. And look how a little bit interesting. We are working higher, but in light of where S&Ps have come off, I probably would have expected gold to already be a little bit higher right now. But if we do see the SPUs challenge this 30.50, or if we go sub 30.50, you're going to see this thing really take off. And my guess is we'd make it up to this 1666 area here. We'll go on and lastly close up with crude oil. I mean, other than being oversold, I think crude's a little bit of a mixed bag. I mean, we had that rally back up here, but now the market's kind of like, I think we got on there. The market's kind of discounting all this talk now. I mean, I think it was kind of a joke. I saw the headline I mentioned to y'all come across right before we started the webinar. Nigerian oil minister, am sure there will be a compromise. I think the market's like, yeah, whatever, dude. So that's why we're seeing this thing give back gains. Support then is going to come in right here. They can easily challenge that level, which is 46.24. We did have a pretty good run. Got to give them there, but really that run did really matriculate until the Russians stepped in. They came in at the perfect time because we've been, this area here, and we kept dipping lower, a little bit lower, and then they waited till this thing really came under some pressure. And that's when the Russians came and said, well, we're looking to go in and cut or whatever. Well, once again, I wasn't paying too much attention. I was looking, was there going to be something? Certainly we did get the headline, and I think OPEC added a little bit onto the bid deal, and that gave it a little bit extra juice, and now we're kind of fading back here. Initial support is going to be 46.24 with the potential for this thing as far as value to come all the way down to 45.35. I don't think it would go that low, but I would say 46.24 followed by 45.77. Anyway, that's all we have for today. Thanks for joining us here on the European Crossover webinar. We'll see you in the chat room.